ROI means return on investment. ROI, which means return on investment. How you will be measuring the return on investment? Return on investment, that means whatever the capital is invested in any business, and with that investment, what is the profit you are, or what is the revenue you are getting out of that business is called investment on revenue. So return on investment or ROI is a mathematical technique that is used to evaluate the return on investments and comparing a particular investment with respect to others. ROI is measured for different purposes. Example, to develop a business case for a given proposal, to grade how well a company is managed, etc. It is a method of calculating a rate of profit or loss of an investment or project after accounting for its cost. So as I told you, it is a comparison between the investment and the profit or loss which the organization gains. So whatever the profit or loss, whatever the in business is facing, that is compared with the investment. So what is the formula for return on investment? Is net income divided by cost of investment into 100. Net income, whatever the revenue the business is earning, that should be divided by the cost of investment. Say for example, if you are investing 10,000 rupees in any business, so what is the revenue you are earning out of the 10,000 rupees? So for example, 15,000 rupees you are earning revenue from out of 10,000 rupees, means 15,000 is your revenue. 15,000 divided by 10,000 into 100. So that is the return on investment. That is the amount you are getting as a profit. Next is calculating ROI in HR. Considering the current situation, consider the current HR policy to see how much you are spending on employees. Conduct a survey to get an insight what employees like about the existing process or what they want to change. After gathering all inputs, set a benchmark to evaluate the ROI of the new process. ROI of a new HR program can be measured by evaluating the improvement of employee satisfaction against the investment of a new program, which will result in employee retention. So you have to take a situation for calculating the ROI. You have to let us be consider a situation. So in the HR policies, how much you are spending? Say for example, you are conducting a program for your employees. Okay, so how much you are let it be a refreshment program. So employees refreshment program or employees training program. So it is a policy it is a policy in your organization that year on year you will be conducting a training program for your employees. So how much you are spending for that particular program, for how much you are spending for that particular training program. So that is called as investment. So that is the investment you have to whatever the cost you are spending, that should be taken as a investment. Next, you have to conduct a survey to get an insight what. So you have to conduct a survey on how much the employees are satisfied with that training program, or how much the employees like what is the satisfaction about the employees. Sorry, what is the satisfaction about the training program among the employees? So you have to conduct the survey, and whatever the change the employee want to be implemented in that training program. And after gathering all the inputs, you have to set a benchmark to evaluate the ROI process. So you have to After getting all the inputs, you have to calculate the ROI, that is return on investment. What is the return on investment? The employees' feedback about the training program is the revenue. So how much the employees are satisfied with the training program, that should be divided by amount that you have spent in the training program into 100. So that is the whatever the percentage you are getting, that reveals the employees retention in the organization. So and also that reveals the effectiveness of the training program, how how much effective the training program is, and based on the training program, how you can retain your employees. So this can be applied to new employees as well, like how much you are spending on recruitment, that is the investment. So and whatever the employees contribution towards the work, and whatever the employees contribution to earn profit out of the business, so that is the revenue. So that revenue divided by cost of recruitment into 100, that is the cost on employees. So using a different categories of HR metrics, miles, quick fixes, long-term return, infrastructure asset, using key performance indicator. So using this to HR metrics, or using this HR tools, you can measure the ROI of the employees, that is return on investment of employees. Smiles, superficial method for measuring employee satisfaction. So smiles is that is you can measure the employees based on their satisfaction. So quick fixes method that measures the outcome of an individual project or initiative. The long-term returns outcome of coordinated strategies over a time. Infrastructure asset measures the contribution of HR to the bottom line valuation of business. Using key performance indicator, the ROI can be calculated and optimized. So using key performance indicator means, so the performance of the employees can be rated, and how much the so what is the cost of recruitment for that particular employee. So the contribution of the employee towards the work divided by amount that is invested on that particular employee into 100 gives the employees cost of investment. So gives the employees revenue of investment. Employee retention rate. Calculate employee retention rate and compare it with the cost of employee turnover to get a sense for the amount of money an organization is spending on replacing employees who leave. So employee retention rate, how to calculate the employee retention rate, that you have to compare it with cost of employee turnover. So how much employees are leaving from the organization, that will be divided by how much the existing employee into 100. So existing employee divided by cost of employees who is leaving from the organization. Cost of employees who is leaving from the organization means the settlement amount, the full and final settlement amount you are investing for the employees who is leaving from the organization. That is the full and final amount you are spending on the employees who is leaving from the organization. So into 100. So the current employee's salary divided by employees full and final amount into 100. So full and final amount means that is the amount you are spending towards the leaving employees. So the current employee salary divided by full and final settlement of leaving employees into 100, you will get the retention rate. Cost of employee turnover. Calculate the cost of employee turnover by taking into account the following factor. Lost productivity. So cost of employee turnover. As I said, you can take the full and final amount, or you can take the lost productivity. So how much productivity is lost? How much productivity is lost by that particular employee, lost engagement, hiring and recruitment cost of that particular employee, orientation and training cost of that particular employee, cultural impact. So these are all the factors you can consider while calculating the employee cost of employee turnover. Current and historical compensation data. Compensation data ensures the minimum wages recruitment requirement, calculate overtime pay compliance, identifies the prospects of employee growth within the company, compare this compensation data with other organization to stay competitive. So current and historical compensation data, you have to compensation data, you have to ensure that you are providing minimum wages to all the employees. Now, you are providing minimum wages to all the employees. That is the compensation you are providing. That is the salary amount you are providing to your employees. And you have to take it into account the overtime pay compliances. That is whatever the overtime the employee is doing and whatever the amount you are spending on that particular employee for overtime. Next, identify the prospect of employee growth within the company. Next, that you have to compare this data with the other organization to stay competitive. So if you want to stay competitive in the market, means you have to make sure that you have, as a HR of the organization, you have to provide minimum wages to all your employees, and you have to take it into account the overtime calculation for your employees. Then that data should be compared with the other organization to stay competitive. So you have to give equal compensation when compared to your competitor companies. Then only you can able to stay competitive in the market, or else your employees will leave your organization and they will join in your competitive organization. So to stay competitive in the market, you have to provide a minimum wages. You have to provide minimum wages to your employees, and also you have to provide overtime payment to your employees for the overtime done by the employees.